Today, how a chart pattern and technique from the 1950s predicted the platinum move of over 30%, a multi-$100 move in platinum. Also, will silver hit $42 this summer? Why I think it will. Welcome to the pit, personal investing tools and techniques for the active trader and investor. My name is Lundy Hill, and this is not financial advice. This is a weekly review of commodities, stocks, and crypto that I find interesting for the week ending June 27th, 2025. First up is the NASDAQ. Last week I highlighted the possible tweezer bars top, a tweezer top in NASDAQ. That's with two bars that have back-to-back tails above it. This did not transpire. We barely broke the lows. You need a close below the lows of the tweezer bars to trigger. That did not happen. Instead, we got a rally. And like I always say, a move above tails is strength. But our first tip-off that this was, okay, that last bar chart was a weekly chart. I zoom into a daily bar chart here. I show the tweezer top 1 and 2, and then we see that on Monday there was a clear out of Friday's low and a spring off of the prior 2 weeks' lows. This is very strong. This was followed by a huge breakaway gap up open above the tweezer bar's high. And the thing about tweezer bars highs is all the bars are formed by sellers sending prices lower. That's what gives you the tails above the body of the bar. If the highs of these tweezer bars are penetrated, all those big sellers are losing money if they didn't cover during the days that followed the top. So they will have to cover once these highs are made because they are losing money. That is what happened, in my opinion, on Tuesday. NASDAQ had an open around the low, a strong up move, and a close near the absolute high above that major pivot high. That's a classic yum-yum breakout, and that means higher prices are coming, in my opinion. And they did, with the NASDAQ reaching new all-time highs 3 days in a row to close out the week on it closed out Friday with a clear-out low. It rallied above Thursday's high and then closed back not only below the open of Friday, but also below the close of Thursday. Also of note is the S&P's Dow and the Russell did not reach all-time highs. Will these latter markets follow suit next week? Comment ATH if you think they will, all-time high. Or comment top if you think this is a divergent top. Next, let's go to platinum. Platinum's had an amazing move this year. We can see that it's up 37% since the Keltner Channel breakout. Following a Keltner Channel breakout over a month ago at a price of $1,050. Prices rallied to recent high just shy of $1,450. That's a move of almost $400 or close to 40%. Our Rubicon trend following system uses the Keltner channel, but it uses a twist to this classic pattern. This was invented by Charles Keltner back in the 1950s and 60s. Of note is that today in platinum, you had a dramatic wide range outside bar down with the close below the open, below the midpoint, below Thursday's high, close, open, and low. So a classic outside bar. This happened 5 days ago and also 4 days before that. And each time of those 2 times, prices rallied to new move highs. I'm not saying it will this time. Maybe we've had 3 drives to a possible top here. So maybe a move back down to the 25 bar moving average, which is that center blue line coming in around $1,230. I do like the fact that the MACD shown down below has made higher highs with prices making higher highs. So no divergent tops here. That to me is constructive for more upside move in the platinum. A similar metal is palladium. It also had a dramatic breakout to 2025 highs this past week. Next, let's go to the other white metal, silver. Silver had a down week last week, and like I was talking about in gold, which did not happen in gold, but it happened here, that was followed by an up week this past week. And silver is forming a possible reverse L formation up. This signals higher prices. An L formation is a big, fast move up, followed by tight congestion around the highs. So this is exactly the pattern that silver is forming now, with 3 tight weekly ranges with closes in a tight pattern. I think higher prices are due for silver. I previously noted here that a target of $42 on silver is possible this summer. I still think it is possible, and I think it's coming soon. And that is just my opinion. Next, let's go to soybeans. Last Friday, soybeans had an outside clear out bar day down. A lot of clear out bars and a lot of outside bars in the last week. This turned out to be an upthrust. An upthrust is where prices make a slight new pivot high and is almost immediately met with sellers. Prices rejected. Beans did just that. They dropped $0.50 to the June lows around 10.20. Will beans rally? And they formed a potential spring off these lows around that previous pivot low. So will beans rally back up to 10.70? I don't think so. I think the speed and the depth of this quick move down over the last week, I say prices have to congest and absorb all that selling pressure before they make a dramatic move back up to highs, to those highs at 10.70. Next is the US dollar index. I've been bearish on the dollar for weeks now, since it broke that bottom red line across those lows spanning the last 2.5 years. We broke, then we retested, and we've made consecutive new lower lows. This is the weekly chart, and this week was a dramatic wide range down week. I still have a target about 3% lower at 95. I don't know if that'll hold, but that is the prior congestion high target zone. Finally, let's look at some stocks. NVIDIA hit all-time highs this week, and not by a little. NVIDIA has rallied over 40% since my reversal pattern number 5 9 weeks ago. I've got that labeled as the 4 close reversal. This pattern says to buy a close above the previous 4 closes if those closes are in a tight formation and you are going with the longer term trend. I also call this a reversal pattern number 1, an island reversal. Note that prices had a gap down into this congestion zone in the middle of March. They had congestion, and then they rallied via a gap, the breakaway gap, the second week of May. So you had a gap into congestion and a gap out of congestion. I think that's a loose interpretation of the island reversal. And this is in my 9 patterns that signal a trend change. These are the patterns that my father has used, or did use, since 1955 in his trading of everything. Finally, let's go to Netflix. Here's a brief chart analysis of the Netflix weekly bar chart. I go in depth on this in my paid Substack, and I'll have a link to that in my newsletter when I do get it finally done. It should be posted soon. Netflix is up an amazing 50% year to date, a gain of almost $450. On this chart, I've highlighted points 1 and 3, which are yum breakouts of previous pivot highs. These patterns could be bought immediately, and of course, paper trading only. Past performance is not necessarily indicative of future results. Point 2 on the chart is a double bottom. And note that the second bottom ended with an exhaustion gap down. Exhaustion gaps down in a strongly uptrending market such as Netflix are end of move potential plays. That's the exhaustion. Exhaustion of all the sellers and buyers are coming in. I've also labeled a couple other points, numbers 4 and 5, as dynamite triangles. These are tight congestion zones after a big run-up, and Netflix could be a great market to swing trade using just these patterns that I just mentioned. I cover a lot more of these patterns in my deep dive in my Substack. Finally, let's go to Bitcoin. I think Bitcoin is forming a potential cup and handle pattern. This is a William O'Neill cup and handle Investors Business Daily pattern. I've got the cup labeled, and then the top of the handle is the dashed line around $112,000 on Bitcoin. I think a break above the handle at this dotted line on the right is the trigger to go long. And I think a wave projection from the bottom of the cup to the top of the handle puts a potential Bitcoin price of $150,000 on the breakout, on a valid breakout. Thanks for watching. Please like and subscribe and leave any comments how I can help your trading. Again, my name is Lundy Hill. I'm a lifetime veteran of the commodities futures market. I made my first trade before I could drive a car, and that was about 45 years ago. Have a good day.